Okay, welcome back, everybody. Happy Tuesday, one day before the long anticipated Fed meeting. So we're going to start in about 4 or 5 minutes. I'm just waiting for this coffee to finish up. I'll be back in just a second. Drop your questions in the comment section if you have any. Make sure to like and subscribe if you haven't already. And the next few minutes, check out the link in the description. Masterclass starts tomorrow. Today's your last day to register. Masterclass starts tomorrow. Today is your final day to register. Check the link in the description. We'll be on in just a few minutes. All right. Let's get the show on the road. Good morning, good morning, good morning. Good morning, good All right. Tomorrow, Fed meeting. That's what all this is about. If you guys were paying attention on the Sunday market outlook, I gave a pretty detailed outline of what I thought was going to happen this week going into the Fed meeting in terms of NAS's direction. Who remembers what I said on Sunday about what I believe NAS was going to do this week leading up to the Fed meeting? Who remembers? Let me know in the chats. Chart Addicts member is beautiful. I know you guys see this. Low of New York, high, entry, TP1, TP2. TP2 got hit. And unless we can break these highs up here, so we're very likely to go lower first. So I think that we have a bit of a bearish open today, even though we're about an hour removed from the session. No, I mean, this double bottom is very convincing. The only thing that I would say is giving me hesitation for the buy side is if you guys can see this wick, even though, I mean, technically, if we go wick to wick, we created a higher low, and so the bullish trend is still intact. We're still creating these higher highs and we still have these higher lows. But now we're making lower highs. And then if we look at this wick here, we can see that the body of this candle closed under. So even though wick-wise, we're still creating this higher low situation, body closed under the previous body, filled a good amount of this wick, and now we're starting to make lower highs. There's a good chance that NASDAQ wants to head lower to 17,626 before we have a real continuation. So here's the kind of scenario, and we're going to go through this trade from, I think it was Monday or Sunday, if I'm not mistaken. So we had talked about these two levels on Sunday. We'll go through these trades here in just a second. If the market holds the 17, how do I make this easy? The 17,700, because this number is just going to get too confusing. 17,700 support right here. If the market can hold this support, then we're going to continue up to that 17,880 target. If we break that support, we have another level to watch at 17,626 or 17,630. All right, so for now, the plan would be to wait for a correction, sort of this double bottom situation here around 17,700. Yeah, essentially just waiting for this correction and then getting a much better entry as close to 17,700 as possible. Stops below this wick, take profits at 17,880. So that's what I'm watching for. All right, keep an eye on that. Big things happening over with the Bank of Japan. Chart Addicts members, we covered this. Strategy works on every pair, everywhere, every time frame. Beautiful correction. And then now we have the continuation. I'm very bullish on UJ. I have no reason to change my mind on that, even though the Bank of Japan did have some intervention. They did step in here pretty aggressively. And by the way, this prediction we made, look at that. Come on. Even the prediction on the yen currency was spot on, down to the exact target where the body of like this is just unreal. All right, so I think that we might see a bit of a correction here because of the intervention from the Bank of Japan to try and prop up their own currency, but I think eventually they don't have a choice. They're going to continue to print their currency, have low interest rates, and destroy the yen. This is their long-term sort of, they don't really have a choice. So that's where I see the yen going. So UJ continue to go bullish. Super secret magnet indicator. I don't want to say it failed us because we're still creating a higher low here. There's still a very, very small chance that, that this thing can head to the upside. So that's a tough one. Yeah, that's a tough one. Let me check the DXY first, see what the dollar is doing. DXY still, I mean, the magnets work. 105.68 still holding a support here. There's a chance that as long as we hold support, we keep moving up to that 107.5. If we break down lower below this support, then we're going to head down to 103.7. It's just zone to zone on the DXY. So if this thing gets aggressive, holds this floor, and continues to move up, gold could drop and give us the correction that we've been waiting on. So yeah, not looking too hot for the gold trade, but until we break the lows, the trade is still valid. So we'll give this one a second. Towards the end of the session, we'll probably have an idea because this thing's going to break in the next probably 30 minutes. So we'll have our idea of where the market's going to go. Price alert is already set. We'll get notified if the market breaks those lows. And that's that. Oh, there's something I wanted to check. Okay. Okay, Bitcoin. Y'all, prediction moving perfect. The market was sitting at around 71K. We expected the market to sort of end up around the 60,000, right at the Bitcoin halving. I wanted to see if you guys look at the different sections here. Right at the halving, we end up at 60K. We have the relief bounce after the halving, which was a lot shorter than I expected. And then we have the move back straight into the 60K range, which is what we're seeing right now. Then I think that we're going to see a little bit of a corrective bounce and then a continued trend lower down to the 50Ks. So that's my expectation of Bitcoin. If you guys are watching these streams, you've been seeing me talk about this every single day because I go through this one by one every day, piece by piece, all the pairs that we've just covered, all the different higher time frame plays. So right or wrong, we're doing it all in real time, and hopefully you're taking notes and you're learning something because lot of value here, a lot of money to be made. Okay. All right. Kind of just judging by the way that the market open is forming, more than likely we're going to break this low and head to the lower level. So if you're in a position where you can take a few trades and you understand your risk management and how it all plays in, you can take both. Right? You can take your chances here if the market gives us a little rejection, but if you want to be more selective and you're tired of taking a way too many trades and you're just trying to narrow it down to 4 good trades a week, you'd want to wait for the discounted level as opposed to taking both and basically taking on more risk. Because every time you open a new trade, there's a new potential for loss every single time. Man, members, man, y'all lucky I'm tired. Actually, maybe not. Because you have some funny answers in the chat. I'm not going to read out loud. Fed rate tomorrow, but today falling. Every global index, commodity, gold, crypto. Man, I covered this on Sunday, bro. Also took W buys yesterday based on the 30-minute time frame. Caught a 2R. Good stuff. Yeah, I mean, these are the same levels that we've been calling since Sunday. Like, if you pay attention on the streams, you're gonna make money. If you're asleep at the wheel, may God have mercy on you. Okay? This is what we had on Sunday. All right, correction down to 17,700. We also had a secondary option just in case. So, see what happened here. So the expectation, the market was sitting kind of in this consolidation here during Tokyo session, which was right here, I believe. This is where the market was when we did the analysis. So the market came up. If you guys can see here, my expectation was a bullish push up and then a retest and then a continuation. We had that bullish push up and then the retest down to 17,700. It wasn't exactly 17,700. You guys can see it was 17,699. It's kind of where we're at here, 17,694. Had to adjust the zone here. Um, Here, there it is. All right, so market pushed up, came all the way back in, and then you guys can see this beautiful wick rejection right there, right into the zone. Came all the way back up, almost hit the previous highs, and then came back in for a second touch this morning. Now we're back in, sort of about to fill this wick, maybe, and right back at that same price. So there could have been another scalping opportunity here from the same buy entry, which is looking pretty good. All right, market is back at our buy entry. Maybe we can, drop a little bit lower, but candle is not looking too hot. So for me, it's structure over individual candles. These are all bearish candles forming. Price structure is forming bearish. However, support is still being respected. And so as long as this support is being respected, I'm going to take a second and basically I'll expect the market to go bullish until it gives me a reason to believe otherwise. So candles, very easy to get tricked up, especially on the 30-minute time frame or the 1 hour, because you look at a bearish engulfing candle that just engulfed the previous one, and you'll tell yourself, wow, that's, the market is definitely bearish. But then when you look at structure and you see that this is the structural support right here, support, 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 and we're still sitting right there, that is what I look for as a priority, as opposed to individual candles. Okay, cool. 30-minute candle just closed. Body of the candle closed above support. That's a good sign. Yeah, this thing don't really look good on any time frame. Huh. Yep. I'm gonna wait for the lower entry, but I'm really considering putting this tester in right now. Putting this tester entry in right now. Double bottom 886, fail break of the 38, closure below the 61, not good. So I'm just thinking out loud. My bad. I forgot my mic was on. All right. Anybody else catch the trade? The buys from earlier this week or no? Also, last day to register for the master class. Last day, last day, last day. Okay, so this is what I'm thinking right now. If we break back above 17,730, we can go over how I found this zone later for the CA members, maybe on the Outlook tonight. If we break back above that, just kind of wick right back above it, I'll take a buy entry there with my stops below the wick. If we continue to close below it, then it's basically a sign that sellers are going to take over. For CA members, like a very easy way to see it is this is 886. This is the 38. This is TP2 right here. So we went up and hit TP2, and then now we're closing below TP1, which is not good. That's typically a bearish sign. So if we can close back above TP1, okay, and just this is going to be a retest, then we're going to head to TP3. Put a one in the chat, CA members. Put a one in the chat in the Zoom if you guys get it. It'll be about a 2.5 to 1 R. All right, I'm gonna put a tester entry in. Like I said, if you want to be more selective, if you've been having trouble taking too many trades or just really not waiting for the best entry or the best opportunities or the best whatever, uh, this is not going to be that trade. You'd probably want to wait for the lower entry if you just want to be more selective. For everyone else, if you know what you're doing, you're more experienced. This is the execution right here. Tester entry. If it continues to play in this area and hold support, you can enter the rest of your position here. So I'm thinking I'm going to split it 25% here. If it dips lower and then comes back above, I'll put 75% right here. All right, and I'm going to be risking half of what I can risk for the whole day on this one position. This whole however many entries I split is going to be half of my risk for the day. If I want to risk $1,000 today, then all these entries, the total risk should be about 500 bucks. That way I still have another $500 to enter right here in case the market drops, and I can make my money back if I lose the first one. Make sense? Okay. All right. Still no entry, still no break above. We almost had a false break above, or we had almost had a break above, but it was a false break. Still waiting. This thing is using that zone that we need to break above as resistance. So just waiting for this thing to flip back above. All right, tester entry going in. And if you guys can just give me a second to adjust this on my phone real quick. All right, still no break above the zone, but this is going to be the best R&R entry. So I'm going to go ahead and put in my tester entry, which is a small position compared to what I would otherwise like. If you want to put you're trading CFDs, you want to put a standard lot size, you would put a 0.25 instead. With futures, if you were going to put 10 contracts, you'd put 2.5 contracts or 2 contracts or 3 contracts. So tester entry going in, that's what it would look like. Did I close that break even? Smart man. Yeah, there's a really, really good chance that sellers take out. Because look, Sunday, since nobody could answer the question, since I don't think anybody's really paying attention. I said bullish start to the week, because that's the real direction. Then they have to entice a bunch of sellers in before the Fed meeting. So they're going to continue to sell off, entice sellers, get everybody scared. And then once the Fed meeting hits, maybe one more sell off just to, sort of give them one last hope before the massive recovery. I think it's all playing out very well. I think Fed meeting tomorrow is going to be the shocker that everyone is going to be the shock. Jerome Powell says no rate hikes, or sorry, excuse me, no rate cuts. That should be bearish. That should be negative for the economy, and Nasdaq will fly. People will go on social media saying, this doesn't make any sense. Don't they'll have all this advice about not trading news and how trading news is this and that. And you guys know these guys. Every single news event, every fucking red folder, every yellow folder, they're on Twitter or on social media talking about some trading news. If you're trading news, you're just a degenerate gambler. You're just a this and that. But just tell me that you fucking gambled your account and lost. Why you got to turn into a philosopher on Twitter? Like, you know what I'm saying? I'm gonna come trade with the best. We trade every Fed meeting live. Haven't lost one in fucking 8 Fed meetings. I think the record right now is 21 out of the last 25 Fed meetings. We're winners live on the streams. That's years of Fed meetings streamed live. Just throwing that out there. All right, cool. Cool. I'm going to monitor this in real time. If this thing fails to break and fails to make the next bullish impulse to the upside, I'm going to close this trade early, close my losses or whatever, and then try again. Knowing how to cut your losses, I think, is a major skill, right? The more that you study the market, the more you study your trading style, um, and the more you know what a losing trade looks like and cutting it quick, it'll also help you understand what a winning trade looks like and allow you to maximize those opportunities. All right, so monitoring this closely. If we start to fill and we see like a big red candle come down below the body of these candles right here, then that's where I'm going to wait for the retest, close and break even, and then let the market melt down to the second entry. Bing, game plan ready. We're set. We're set. Yeah, if you've taken the master class before, give me a 1 out of 10 in the chats because there's probably a lot of people watching. They want to take the class, don't know if it's worth it, don't know if it's going to be worth the money, don't know if it'll work for them, don't know if they'll be able to use the info, or maybe it's too complicated, or maybe they're not ready, or whatever it might be. What advice could you give to folks about waiting, not waiting, um, and just taking advantage of it sooner rather than later? TP1 hit for me on NAS today. Good stuff, George. Love to see it. Wow. Not beautiful rejection. Beautiful rejection so far. Yeah, I think gold is gone. I think gold is going to be breaking bearish here, but too early to tell. What's Euro USD doing? Still no retests. This is the biggest heartbreak in a while. I was going to ride the swing trade all the way down. Missed the entry. Kept trying to wait for a re-entry back up because I thought it was going to do this impulse, create a higher low, come all the way back up, and then drop. Nothing. Not a fucking drop. Just more continued bearishness. 1.0514. That is the target for Euro USD. We're going to get there here pretty soon. Bitcoin hit the 60K region. If it's bearish, I think that we break below first and then come back up for a recovery. So that's what I'm watching for here. And then let's just keep an eye on NASDAQ since this trade is active. I have half a mind to protect this trade, but I know it's too early to do that. I had half a mind to just protect the trade, put it in break even, and then if it rides, it rides. If it doesn't, it doesn't. But ultimately, I'm in pretty small position, so that's why I just don't really care. I don't say I don't really care, but I'm more comfortable just letting it ride. Even though I'm having this sort of this like back of my spidey senses feeling that what if the market breaks down? And that's trading. As soon as you enter a position and money's on the line, that's where the doubt starts to come in about whether, all the thousand scenarios that could happen, they all start to play up. Well, what if the market does this? And that's why the more you learn, the more destructive it can end up being. Because then instead of just letting the market do the simple thing that it should, we end up basically catastrophizing to the worst case scenario, which leads us to close a trade early. But I closed it because I thought it was going to do blank. And it was just a feeling or a thought or an inclination, but there was no proof of it. So let the market prove you wrong. Don't let your brain play tricks on you. Don't let your brain start to introduce these doubts, such as the potential of loss. What happens if I lose this trade, but I already lost X in a row? And what if this is like those? And I've seen this kind of trade before. And those are the thoughts that naturally come up when you have real money on the line, when you're engaged in any trading activity. And so when we talk about trading psychology and what makes trading so hard, if it's just zone to zone trading, if it was just supply demand trading from zone to zone, don't you think the failure rate would be a lot lower? Don't you think the success rate would be higher than fucking 5 or 7%? All right, so the whole game is not the technicals. The whole game is the mindset. Okay, so first the mindset of the discipline to stick to one thing for a long time. And then when I say mindset is your money, your relationship with money starts to get exposed when you enter a position or right before you're about to close or right before you enter. The fear of potential loss, the fear of um, potentially being wrong, the fear of leaving money on the table, the fear of missing out on money that other folks are going to make, the fear of all the work that you're putting in going to waste, the fear of people finding out that you failed at trading and this is the endeavor you've committed your whole life to and it's not working. Those are the fears that start to come in. And if you plateau in your trading, then you might not experience those fears because you're playing in a comfortable level. But once you break out of your comfort zone and you start to grow, you'll be reconfronted with some of those doubts, fears, and potential distractions. And that's why it's so important to be self-aware, understand how you react to high stress situations so you can be the most cognizant of those things that could get in your way, right? Those behavioral things that might come up in your trading later as you start to grow in size and scale, right? I feel like your brain will always assume the worst, not just in trading, but in general. Mike, of course, because our brain is not built for success. Our brain is built um, for protection, right? So if you're sitting in a cave, basically your body starts to produce enough neurochemicals and enough basically bodily hormones and neurochemicals to get your ass to do three things. It's either get up and hunt, run from mountain lion, be very vigilant, get out of danger, or preserve and procreate for the species, right? So again, get out of danger. So when you're in a trade, the second that it starts to go the opposite direction, your brain goes into this fight or flight response, which is you feel like a mountain lion chasing you. And so your body just wants to go get out of the danger. And that's as simple as closing the trade. So you're telling me if I close this trade and get out of the way, then I'm out of the danger. So your brain is just screaming, get out, get out, get out, stop the potential risk. And that's why you have to be self-aware and override that automatic system. Otherwise, it's always going to take over and you'll make emotional decisions. So our brain is never going to be made for, especially in trading. Yeah. It's not going to be made to be like your best friend and your supporter. When you're winning a trade, it starts to play tricks on you as if it's going to go forever. Oh, I'm up $4,000. That's more than I made in the last 4 months. That's the biggest trade I've had. But okay, now that I broke 4,000 and I could pay off all these bills, if I just hold it for another 100 pips, now I can pay off my credit card too. I'm just going to hold it for the next 40 pips and then close it. It's these tricks that start to come in. They're all based on a spectrum of fear and greed. It all comes back to some spectrum of fear and greed. Greed says, not enough. Should have went bigger. Damn, I wish I entered a bigger position size. Right? I shouldn't have closed that trade early. Fear says, but what if? So you have all the reasons for why the trade could go in your direction. You enter at all the right levels, you make all the right money. There's a fear of like, but what if it doesn't? And that starts to play into your decision making on the chart. So it all goes back to that spectrum. Now, all that being said, it's like a primitive response. Of course, we have 10,000-year-old biology, yo. All right, so I know that we've sort of had a bit of a rewiring with technology over the last 20, 30 years, but we're still about 10,000 years old in the biology. And the people who set up the markets and the current structure of price movement, they understand human nature better than we do. That's why it's so important to know yourself, because you might not be able to have the same knowledge as the hundreds of PhDs and behavioral scientists that they hire to help engineer the business model of the markets. You might not be able to beat them at that game. They know you, they know people and human nature more than we know. And that's why they're able to swing price a certain way and entice buyers to chase using FOMO and then do a rapid shift in the opposite direction, causing everyone to panic into the opposite direction before you ultimately have that direction of the trend, which was bullish at the time. So they understand that. What can you do to kind of create an equal playing field is to understand yourself, your behavioral tendencies, your emotional responses in high stress situations, how you've typically handled them, and how you should have handled them. Now, the market is going to try to play tricks on you. You cannot play tricks on someone that is not playing the same game as you. It's not playing along. It's not paying attention. Okay, that's why you will see the most successful traders out there are some of the dumbest people in the world. Not in the world. Some of the dumbest people in trading. Okay, my dumbest friends, and I'm gonna say this as disrespectfully it's about to sound because these are my boys, and I'm gonna call y'all stupid to your face too. Some of the most successful traders that I know are fucking stupid. And I tell this to them all the time. They're too stupid to doubt themselves. They just keep winning. And I can call them stupid all I want because they're fucking winning. They don't care about what I say. Words can't affect you when you're winning. I used to beat myself up that the most stupid have the most success. Why would you beat yourself up for that? Warren Buffett said it best. Investing doesn't take that much IQ. So if you got too high of an IQ, you got a 140 IQ, you might want to leave 20 points at the door if you want to be successful. I do the same thing in trading. Okay, I leave. Man, y'all know I'm fucking genius. I'm leaving 50 points at the door. I feel lighter when I hop on these streams. 50 points at the door, just shave it off, take the backpack off, go pick it up on the way back out. Right? Because you cannot, like, I'm telling you, the most successful traders I know, they are not doubting themselves. They're not overthinking it. They're not saying they're what ifing every situation. They're taking it. Here's how I would describe that mindset. Because part of the performance flow state, trading in the zone, is all about being in the present moment. And so their mindset is, I'll cross that bridge when we get there. So right now, my immediate response to the market kind of heading back towards the entry is, what if the market breaks down and then hits my stop loss? But even though that's my feeling and that's my thought, price is still above our entry and still creating a higher low. And so if the market does use this as resistance and start to break down bearish, I'll cross that bridge when I get there. Because if I'm sitting there worrying about it now, it's going to cause me to make a decision now based on things that I think might happen. And that's just not based in reality. That's all delusion. You guys get what I'm saying? Now, with that being said, if this thing does start to break down, then I already have a plan in mind of how to exit. And so I am keeping an eye on this. But pretty good lessons here in trading psychology today. Plus, now we got algorithms studying our every move. It got to be unreal the amount of information they're accumulating and using against you. Mike, don't be so sure, brother, because I've had so many conversations with Dr. Olson, and he really broke this. This guy is too smart, man. You guys got to give him some props. Dr. Olson was talking about how trading should be viewed more as a like a geoscience than it is a hard science. Let me explain the difference. In math, 1 + 1 = 2. It's got a straightforward answer. There's no prediction or sort of like wiggle room there. It's a hard answer. 1 + 1 = 2. In hard sciences, it's the same thing. Why, certain gravity and all these different things have a very consistent formula that we can observe repeatedly over and over and over again. Geosciences like the weather are unpredictable because we can try our best and they can tell you, hey, it's going to be raining today. But how many times you check the weather app and it's wrong? Very often, right? Because it's that unpredictable. It's got an unpredictable nature to it. And so Dr. Olson explained that when he was building Oanda and some of their algorithmic systems early on, he started to build the price discovery algorithm more like they would track earthquakes or volcanic eruptions rather than they would a hard science that had a 1 + 1 = 2. So I think that should help you understand that human nature is unpredictable, and the more data they get, the worse it is for them. You understand? Because they're going to realize that it is fucking random. Here, I know this is kind of unbelievable. Some of you guys might be statisticians and you're just like, if you give me enough data, Roy, I will find the pattern. Same. I thought the same, and I'm still confident I will because I'm that arrogant. But prop firms, they started to try and guess who would be the successful traders and put real money behind them. The very like few 0.001% of those traders they tried to back. And the ones that they really had high hopes for all failed. 3, 4, 5 months of consistency, they start to back them with real money. And then 2 weeks in, they blow the whole thing. Human nature is unpredictable. Who here has ever just been consistent for a fucking year and then one day blew it all up, ruined it all with a stupid mistake? Whether it's a relationship, a business, a trading, consistent for so long. One day, blow it all up. Humans, we're stupid. We do random stuff. But thanks, Roy. This week's going to be great. Panic selling and stop loss hunts. Roy, do you think, based on what you said in sentiments of people of meeting tomorrow, gold will probably go up today to protect capitals? Nah. At this point, I think that as the DXY continues to rise, if the DXY continues to have this strength, gold is going to crash big time. I think if anything, we'll see a bit of a dip in the dollar tomorrow, if anything. But for today, I would say gold is going to continue to the downside. Yeah. And then tomorrow we might have a rebound. All right, I'm watching this closely. We're back at entry. Like I said, if we start to fill this wick, this is where I'll be looking to jump out of this trade. So keeping an eye on this, monitoring it in real time, and being effective. I do have to hop off in a few minutes. Have a meeting to prep for, so not going to be on too long, but I want to stick around just long enough to, let this trade play out and see if there's an opportunity or a chance here to get out in profits. So the human error is inevitable. Exactly, Mike. And that's why the more clear you become about your step-by-step system, you can build an algo or an EA or an indicator that can help you eliminate some of that human error. You get me? So the key is to trade manual until you really understand what you're doing, and then you can basically program it into one of these EAs. And we'll be showing you guys how to do that once ours is fully set up. Roy, if the lower entry happens 2, 3 hours before news tomorrow, would you just take it or wait for the news to play out? Maybe, Mike, you've been asking some of the best questions, man. These are so solid. And that's why I'm gonna give you the straightforward answer. Take the trade, but don't expect it to be the one shot. Like, don't expect that one to be the Hail Mary. It's gonna hit the zone and give you profits, and then it's gonna keep coming back 3, 4, 5 times, might blow through it during news. So every time it gets there, there's a chance to make money. And that's what I'll be doing is sort of scalping at the zone. And then towards the end of the Fed meeting, and then afterwards, that's where we're going to get the true entry. After it does something very aggressive, like blow through that zone to grab liquidity. So every time it touches, you can make money just like this first zone. Because if you look at the 17,700, there was a chance to make money here, 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 and here. And so once the price comes down, it'll give you the first touch, and then it'll blow through and give you the second touch, and then come back for the last retest before it goes. We'll have one, two, and potentially three opportunities here. You get me? Good question, Mike. Do you trade pair still or mostly NAS? I trade pair still, but like I said, I missed that Euro USD swing trade because I only really look for swing trade opportunities. If it's not a swing trade, then I ain't really touching it. And if I miss my swing trade, it's a sad day because it's another month before that bus. It's like missing the bus, except the next time it's going to hit that station is a fucking month and a half. So you're just sitting there for a month and a half at the bus station, just cold, sad, and cold, and hungry, and sad. That's how I feel. So yes, I still trade Euro USD and USD JPY. However, because I live in the US, I mostly watch what the dollar's doing. It's easy for me to trade dollar pairs, and UJ and EU are just too easy. Um, but missing the swing trades, that'll get you. So that's the boat I'm on. All right, I'm gonna stick around for about oh wait, we just have a video that just dropped that's premiering right now. Oh no. Might have to move the time of the premiere. Everybody, make sure to go check out that Peter video right after this stream. Go check it out and support the channel as soon as we're done with this stream. Um, that'll be awesome. Is it perfect? That helps out a lot. More than you know, bro. More than you know. You're gonna discover something trading that way and just sort of not overthinking it, get into the zone, cooking up at those certain higher time frame levels. You're gonna have an experience tomorrow that I don't think you've had before. Just being a lot more confident, less risk taking, less random higher time frame trades, more just very in and out scalp at higher time frame levels. I think you're gonna find that to be very, very I won't say stress free, but way less stressful. Way less stressful. All right, moment of truth. Yeah, we're probably going bearish today, y'all. Let's be honest. I'll still give it a chance to see if we can close in profits, but this is not looking good. We closed, body of the candle closed below that ideal entry that we had, which is not good. Big wick rejection, lower highs getting formed. Everything is basically saying more downside to come. So, gonna give this thing a second to see if it's gonna kind of fill 50% here, kind of halfway and come back up, or if we fill and just close down here. We close with a candlestick inside this range. Probably look for it on the 15-minute here, which we have another 12 minutes to go. So that'll be our tell. I'll be on here until about 11:15. Then we should be good. All right, so we'll just stick around here for a sec. I'm gonna go grab some water. I'll be right back. If you guys have any questions, drop those in the chats. If you don't have any questions, what's going through your head? What's going through your head? You guys ever seen the old Western movies? There's that tumbleweed going through. All you hear is just the whistle. Just if you ain't have no questions at this point after an hour, what's going on? You having a showdown? What was the deal? Like, oh God, he's probably thinking about so much. There's probably just so much going on in that complicated brain of his. And you look inside, it's I'm Paul. You guys know the three-headed monkey from the fucking Jimmy Neutron? That's what's going on. You're just sitting there clapping. I'm Paul. Right? No questions. Is it anything to expect from FM? Chris, I'll answer as soon as I get back. All right, give me a second. I'll be right back. Um, yeah, hopefully this thing rejects by the time I get back. If not, it'll probably be somewhere in this region, and we'll have to make a choice about closing or not. No question and no trade for me today, waiting for what it'll look like tomorrow. Smart, smart, smart. You are never obligated to trade, especially on news days. All right, I'll be right back. All right, I'm back. Right on time. This is the moment of truth right here. Excuse me. Wait, yeah, there's a bunch of laughing emojis. What are you guys laughing at? What did I say? Oh no. All right, y'all. I'm jumping out of this trade. Let me just close this on my phone here. All right. Took a slight loss. It was a quarter%, or it was a quarter of the overall position size, and I cut it early. So that was in my opinion, a great decision making and good execution. The only thing I'm starting to see is that if the market does break back up, so if it doesn't hit that lower zone, delete all these fibs and shit. So if it doesn't hit this lower zone, but instead hits the stop loss and then comes back up, this is the only one that I'm sort of hesitating on, which is will I take the retest or the break back inside? Because to be honest, that would be a great trade. It would have already cleared liquidity, everything would be in place. But for me, I had those two original options, which is choice one and choice two, and the stop loss getting hit and then rebound back in wasn't in my cards. So now I'm making a decision in real time that I didn't have previously planned. So part of my rules is planning your trades and trading your plan, and that one was not in my plans. And so if this thing does rebound back up, I'm going to have to see enough confirmations to get me to break that plan and to enter a trade that wasn't originally part of the cards. Like, do you guys understand what I'm trying to say? Like, this was not in my cards, and so even though it looks good and it looks like it could go back up, because I hadn't planned the trade, that's where I should be making my decisions from. Not, if I whether or not I think it's going to go up or not. Or when you said hi, I'm Paul. Yeah, bro. I don't know where that one came from, but I'm gonna go back and watch that one. I'm gonna make that my alarm clock in the morning. On a side note, I also trade JPN 225. I'm in a win on your strategy at the moment. Well, the invisible trader, that's awesome. Never heard of the JPN 225. I'm guessing it's an equities index from Japan, but that also probably explains why I've never heard of it, if I'm just going to be honest. All right, no more digs at Japan, man. I'm trying, right? They're in a tough spot. But the reason I got to dig at Japan is because if we don't learn from them, then we are doomed to repeat the same mistakes here in the West. And I think that we should just let them put their hand on the stove, and we shouldn't do that, right? We should be like, oh, the hand on the stove, not good. Fire, very hot, right? So I don't know. I throw a lot of digs at Japan. I love the Japanese people. I mean, not all. Like I don't fucking know all the Japanese people, but you guys get what I'm trying to say. I got nothing against Japanese people. However, the Bank of Japan, they got a very tough battle, and so they kind of catch strays pretty often on the stream. Now, no need to watch the screen. No risk. Big event. So hedged calls and puts with same price. It falls or rise 2% profit. But tell me you're new to trading without telling me you're new to trading. Every single person here who's been trading for more than a year has tried the buy stop and sell stop strategy during news. We're like, oh, if it just goes up crazy, I'm going to have a buy stop right here. And if it goes down, I'm going to have a sell stop right here. Or I'm going to have a buy and a sell with my stop losses on both sides. And then what the market will do is go up and activate all the buy stops, hit everyone's stop loss for the sells, and then they're going to go down and they're going to activate all the sell stops and hit all the stop losses for the buyers. And then it's going to make a move. And then everybody who's on that, oh, but I just took both positions and whichever one wins, wins. Now you lost both. You lost both. Don't try to outsmart the market. Is there a correlation between VIX and US 30? Yeah, of course. The volatility index, I mean, like equities are one of the most volatile instruments. So if you look at higher risk, higher return instruments like cryptos or equities, they typically follow the volatility index. The higher the volatility, the more likely you are to see action in those high risk assets. Now, the lower the volatility, typically a slowdown in activity there. So we need volatility. We're slaves to volatility as traders, and a high VIX count is typically good for activity on NAS 100 and US 30. Now, if you're talking about directional correlation or move by move or candle by candle correlation, that I haven't checked, but just more about sentiment and sort of market liquidity. That's what I would use it as a measure for. Like if the high VIX, meaning there's some shit going on in the world, it's a fear and greed index basically. And so the higher the VIX, the more the greed is there. The lower the VIX, the more the fear is there. You get the drill. All right, almost there. Almost there. So set your alerts, y'all. I do have to hop off. So what I'm going to do is set my alert just above that zone. I'm going to set my alert below the zone. And I'm going to set one alert below this wick in case we have a full break below. And so I only want to be notified if I get my first entry, second entry, or if this stop loss area gets activated. So now I can walk away. I have notifications set on my phone. If the market comes into this zone and rejects, I'll take a buy entry. No matter where I am, no matter what I'm doing, I know my risk. I know how much I can afford to lose for the day, and I'll be executing. Okay? Any questions, comments, concerns, anything like that? Pretty straightforward, pretty short stream. Tomorrow, we're going to do 2 streams. One in the morning in order to prepare for the Fed meeting, and then we'll do the actual Fed meeting live together. 2 big reminders, FX Summit 2024, new dates, new venue announced. We had to basically find a venue large enough for over 5,000 people, which is incredible. Appreciate everyone for your continued support in making the conference the largest retail trading conference in the world. Shout out to you guys. So make sure to grab your tickets at fxsummit2024.com. You guys have seen us throw the most incredible events the past 2 years. You guys have seen us bring the entire trading world together, bring institutional folks to give their insights and really give a holistic view of how markets are moving, where the direction of, or what the direction of trading looks like, what the future of the technology that we'll all use looks like, what successful traders did to basically break out of the mold. This is your opportunity. Get around thousands of traders, get around some of the best minds, get around the technologists building the stuff, and get around the market makers, brokers, and institutions that are basically playing in the back end. November 2024, FX Summit 2024.com. And then, of course, 1 day left to register. Today is literally your last day to register for the May 1st NAS 100 class. Make sure to click the link in the description. Sign up for the class. We'll see you there. If you're looking to change your life, learn a consistent strategy that is repeatable, that is consistent, click that link. We'll see you there. I think there's one more. Oh, we were supposed to give away. Okay, since tomorrow's the Fed meeting, Max, we're going to give away one of the merch tomorrow on the stream. We'll give away one of the 88.6 Boys t-shirts tomorrow live on stream. And then maybe we'll give away a few free tickets to Dubai tomorrow on the stream as well. We'll see you there. All right. If you register, by the way, if you guys register for the masterclass, you also get a free ticket to the FX Summit. So whatever you guys are looking at the price and saying this and that or whatever, besides the fact that it's basically a damn near free based on how valuable the class is, also getting a free ticket to the summit. Anyway, what are we talking about here, people? Roy, use your fib on the 1 hour. What, body to wick? Yeah, no, I'm locked in. I'm locked in. On the 30-minute, it's even lower. It's at 611. If I kept going down, actually, this thing probably just keeps getting lower and lower. Now it's a 610. Yeah, it's gonna be a little bit below 620. So it's gonna get here. Wait for it to go a little bit below, and you'll have some better opportunities between 600 and 620 best buy entries. All right, y'all. Happy safe trading. Take it easy. Check out that Peter video that just premiered a few minutes ago, and leave a comment on any of the content if you guys like it. Take it easy. Happy safe trading. Peace. All right, Chart Addicts members, you guys got the drill.